What's going on, guys? Happy Friday. Welcome back to another Dividend Happy Hour. First things first, check out this shirt, guys. I just got this in the mail. This was sent to me by Brandon Beavis over at Blossom. I think it was all Brandon's doing. Shout out Brandon. Shout out the entire Blossom team. This is insane. Yeah, this is insane. So this is probably to commemorate our partnership with Blossom for the deep end. By the way, guys, if you want to check out Blossom, there's a link to it in the description of the video. And there you can see my full portfolio. You can see let me see if I can get close enough here. You probably can't really tell that well. Here's me and Ari, obviously. And then this is my full portfolio over on Blossom. We've got Visa, Starbucks, Johnson & Johnson. This is Apple for Ari over here. Realty Income, and then it cuts off after that. But isn't this crazy? Crazy. Very cool. I don't think Brandon's watching, but Brandon, man, if you're watching, you're a wild man for this one. And thank you so much for the kind gift. This was such a fun surprise. Anyway, guys, what's going on? How's everyone doing tonight? Hope everyone had a great week. What a week it was on the stock market. I don't know about you guys. I was down a bit this week. We finished out today. We did manage to pull out a slight gain today. But unfortunately, if we take a look at my portfolio over here on my dividend portfolio tracking spreadsheet, which you can start using for free, there's a link to this spreadsheet in the description of the video. I'm a bit farther away from 100K today than I think I was this time last week. So now we're $97,200 or so, about $2,800 away. And I don't know what to say, guys. It's just teasing me. You know, Charlie Munger said that first 100K is a B. He said it's a B word, but you got to do it. He said that's the hardest part about investing. And I've got to say, it's not been I mean, I guess technically it falls under that, but it's not been the first 100K. It's really been like the last 2K to get to that first 100K. Like 98,000 to, well, I guess 97,000 to $100,000 has just been a real test of patience. I will say that. We'll get there eventually. It's just, you know, as it goes, it's just a lot of this, but anyway, that's where we're at. How was all your guys this week? It looks like there's 53 of us in the stream right now. Thank you all for tuning in. I see a lot of the usual suspects here. Happy to see all of you guys. But yeah, how was your guys' week? Were you up? Were you down? Anything? Well, hold on a second, actually. Don't tell me if anything crazy happened yet. We haven't gotten there yet. But Andrew, to answer this question real quick, no, I did not pick up any extra Visa this week. I did manage to buy some more Zoetis though. About a couple of shares, like almost 2.5 shares of Zoetis, I think. And that position's really starting to get up there. But yeah, Visa's looking good. I think right now, according to my spreadsheet, it's now under $340 per share. So it's heading in the right direction. I am happy to see that. And you know what? Johnson & Johnson as well is really seeing a decent pullback right now. It's just under 150, 149.79 according to the spreadsheet. So that one's kind of interesting. That one, Zoetis, you know, let's see what Visa does. Like I said, I like the direction it's heading, but I would say in my portfolio right now, Zoetis and J&J are the top two most interesting ones to me. Chris has some big news here. So I want to hear about that new position. But guys, yeah, Jake's got a good question about Blue Owl. I know, Andrew, it's teasing us, man. But once we officially hit that 100K, it will be such a sweet victory. And we got to figure out some sort of way to celebrate here on the live stream. Yeah, Striper Kid, I did start the stream a little bit early. I actually forgot to mention that. I was just here. I was here. I was set up. I was ready to go. So I figured, why not start just a few minutes early? I only started like 4 or 5 minutes early, so nothing crazy. But guys, before we continue on, why don't we kick this thing off officially the best way we know how? Grab whatever it is you're sipping on. Oh, yep. Hi, buddy. You guys hear Peanut? You want to come say hi? No, he don't want to. You can see him right down there. Yeah, he sees some birdies outside. Anyway, guys, grab whatever it is you're sipping on. Here's to you guys. Thank you so much for coming to hang out with me for another dividend happy hour. What is bound to be another very fun live stream. I was really looking forward to being back with you guys tonight. So here's to you guys, and also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because that's really what's bringing us all here together tonight, right? It's the pursuit of financial freedom, the pursuit of having full ownership over our time. And I definitely think that is worth cheersing to. So cheers, guys. Ooh, that is good. Got a little 7-Up tropical, just like last week. Really been loving this. Been alternating between this and Fresca. That is really good, though. So let me know a few things here in the live chat, guys. I want to know, number one, what did you guys buy this week? Chris, I know you started a new position. I don't know what it is, but let us know here in the chat. What is that new position? So I want to hear that from you guys. Number two, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Number three, did anything cool happen to you guys this week in the portfolio? I know share price performance wise, most of us are probably not sitting at all-time highs or breaking new records in that regard. But if anything else happened that's worth sharing, any other accomplishments, drop them in the chat. Would love to celebrate in that with you. But also number four, last but not least, I want to know if we have any first timers here in the live stream. In case this is your first time tuning into the Dividend Happy Hour, just so you know, we do this every week. We do this on Friday night starting at 5 p.m. Pacific time, a little bit earlier sometimes, a little bit later sometimes too. But normal night starting at 5 p.m. Pacific time, 8 p.m. Eastern time every Friday night. And I hope you enjoy this stream. It's just always a fun opportunity to come hang out, talk stocks, no agenda, see where it goes. So yeah, I'm gonna go through the chat and just see what all you guys have to say here. So let's see. Wow, Blazing Fi, 8,500 shares of SCHD. That is insane. That's crazy. You're about to get a very nice dividend payment here this month. Tim sipping a Corona. That's very nice. Very, very nice. Janice sipping a Pepsi. Chris with a Ghost Red Sour Patch. Nice, nice. Yeah, Shay, I would grab some coffee for sure. Striper Kid sipping on some Tito's. Just Tito's on the rocks, or what do you got in that Tito's? Anything else? Maybe you're sipping it neat. Tito's neat? I don't know. Janet sipping water on the hour commute home. Drive safe, Janet. Please drive safe. Hope you get home safe. What is this right here? At what's a DPR percent? Oh, probably dividend payout ratio. What payout ratio would you get concerned in a dividend king? I think Coca-Cola and Pepsi are both nearing 80%. This is a really good question. We'll go through this later on in the stream. I'll save that one for later. But yeah, great question. And we can take a look at both Coca-Cola and Pepsi to see where they're at. I know with Pepsi, and we talked about this last week. We've probably talked about it the last couple of weeks in a row. Pepsi's payout ratio, at least the free cash flow, has been over 100%, which is a bit sketchy. So we'll take a look at it, though. Let's see. Daniel picked up some MSCI. That one is Micro Systems, Micro MS. Oh, no, that's MSCI. What am I thinking of? Sorry, guys. Spilled a little Pepsi. I'm thinking of Micro Systems, What am I thinking of? Oh, I'm thinking of SMCI, Super Microcomputer. Very similar. Okay, what else we got? Janet picked up SCHGD and the Hershey Company. Very nice. Very nice. Korean Cardboard with some Blue Owl Capital Corporation. Good stuff. Tommy picked up some Google. Nice. Chris dove into some J&J and MTN, Vail Resorts. That one's always very interesting to me. I really like the company. I think it's interesting. I grew up snowboarding. And so I'm familiar with all of the mountains that they own. I can just never, I don't know, as an investment though, it's never been one I've been able to get that interested in. Sir Dude Bro Man bought 15 companies today. Holy cow. Okay. Boaz, 2.6 shares of SPGI. Nice. Trey with a nice little shopping spree of Home Depot, SCHD, and Realty Income. Nice, nice. Yeah, Lowe's is, I was looking at Lowe's yesterday. Man, they're at like a 52-week low right now. That one's also looking interesting. I forgot to include that in my list of potential buys. I would buy some Lowe's here if it gets continues going lower. Maybe if it gets like around 210 or below, that's when I'd probably start adding more to it. But for now, I'd rather put that money that could go into Lowe's into more Zoetis or even into Johnson & Johnson. Let's see. I think my wife's already making dinner. I can already smell it up here. She just made some chocolate chip cookies. I'm not exaggerating when I say this. So actually, let me take a step back. I'm not a big sweets person. I really would rather have like pizza or burgers or more savory food. I'd much more prefer that over any sort of dessert. With that said, though, chocolate chip cookies are my one exception. I am powerless before chocolate chip cookies. And like I said, I'm not exaggerating when I say this. My wife makes the world's best chocolate chip cookies, and they're seriously to die for. I had one right before coming up here and getting on the stream, and I asked her if I could have one because they just come out of the oven, and she's like, "Are you sure you want to do it? We're about to have dinner in like an hour." And I'm like, "Yes, I absolutely do. Give me that cookie. I'm not taking no for an answer." And as if I don't have room for a chocolate chip cookie and dinner too. Come on. Forget about it. And I will also be having another one after dinner. So, ooh, Reddit rundown, some peach Snapple. I haven't heard anyone bring up Snapple. I couldn't tell you the last time I heard of someone drinking Snapple. Used to love Snapple. It's fun too. Fun to say, fun to drink. Okay, here we go. Chris's new position is ASML. Not too shabby. Cool. Good pickup. Yeah, man started a position in Merck. Goodbye. Very good. There you go. Andrew's going to be breaking out the top shelf when he reaches 100K. I'll tell you guys this. When I hit 100K, here's how we'll celebrate. I'll have I haven't had like a margarita or anything on the live stream, and it's been a long time. It's probably been well over a year at this point. When we hit 100K, we'll definitely celebrate. Maybe I'll have a couple margaritas here on the live stream with you guys, and it'll be fun. I also think I was talking to my wife about this. I think maybe we'll do like a fun dinner or something too. Like maybe we'll go out to a nice fun dinner, have a fun date night around it to celebrate the milestone. And I thought and maybe I've already talked about this. I apologize if I have, but I thought it would be fun to like film it, like vlog it. And so that might be the next vlog I put out, is like hitting $100,000 and taking you guys along for the experience, whatever we do. So yeah, Tim, are your old live streams available in your video collections? Yes. If you go over to my channel, you'll see different tabs. You'll see like home, videos, live, playlists, posts. If you just click on the live tab, it'll show all of the live streams. Every single one is up there. So let's see. Yeah, Liv wants to look at Target. We can do that. Wife's feeling pretty good, Eddie. Thank you so much for asking. She's doing good. Doing really good. Let's see. All right, guys, I'm going to scroll down. I'm about 4 or 5 minutes behind in the chat here. So Midway Piper's in the building, my new friend. I've been watching. I left a comment on his video also right before going live, but I've been watching a lot of his videos. And excuse me if I'm mistaken on this, but I think your name's Alex. Hopefully I have that correct. I've been watching a lot of Alex's videos. Really, they're really relaxing. It reminds me of, what's that other channel? Oh gosh, what is that guy's name? What's his name? Oh gosh. Dry Creek Wrangler School. That's what I'm talking about. That's kind of what it reminds me of. But over on his channel, that's what he's doing. He's just sitting in his rocking chair, smoking his pipe, little pipe tobacco, and just talking about books, talking about investing, talking about life. It's like I said, it's really relaxing to listen to, and yeah, I've been really enjoying your videos, man. So good stuff, good content, and keep up the good work. Check it out. Check out his channel, guys. Midway Piper. I think you guys would like it. So, all right. Craig, no, I didn't. I did not add ASML. That was Chris here. No ASML for me. Let's see. Average cost for average cost for lows is, yeah, like 194, I think. Yep. And real quick, guys, once I get caught up in the chat, I'm about 5 minutes behind now. I'm going to go through some of these questions we have saved. So far, I've got 3 of them. And if you guys have any investing questions or anything, drop them in the chat, and we'll try and get to them. Marcos is here. What's up, Marcos? Yeah, Janet's got a good question there. Let's see. El Dynamico, what kind of cravings did your wife have in her first trimester? The cravings really haven't been that bad. I'm trying to think if there was really anything crazy. She didn't really have cravings. It was more so there was a lot of things that usually she would like and usually she would eat that just did not sound good. Like, for example, we love getting froyo, especially this time of year here in Vegas. It's getting hot. That's typically like a weekly thing that we like to do. But in the first trimester, she told me this a couple nights ago. I don't think I was eating froyo. Maybe we were eating froyo. I don't remember. But she told me, she was like, yeah, I remember, in the first trimester, we were sitting up here watching TV, eating froyo, and I thought I was going to be sick just from like seeing it and being next to the froyo and hearing you eat it. I thought I was going to get sick just because it did not sound good at all. So there was a lot of stuff like that really just, she really lost an interest in. Coffee was another one, actually. Interestingly, she couldn't drink. Coffee did not sound good. And we're pretty, as you guys know, we're pretty adamant coffee drinkers. And yeah, she could not stand the smell or the taste of coffee in the whole first trimester. That's come to pass, and she's pretty much back to normal. But yeah, the cravings really haven't been anything crazy. So ooh, that's a good question, Matt. You going to use dividends to pay for the special 100K dinner? Probably not. That would be fun, but yeah, probably not. Probably just reinvest them. That would be a fun vlog, though, using dividends to, I don't know, gambling my dividends on red, on roulette or blackjack. I don't know. Yeah, Kaysen, I can answer this one super quickly. Thoughts about AbbVie? Any updates on them? I don't really have an update. I still think very highly of AbbVie. I'm really impressed with how they navigated the patent expiration of Humira. Rinvoq and Skyrizi are doing very well for them. My only regret with AbbVie is that I don't own more of it. And this is actually something I've been thinking about lately. It's AbbVie's getting to the point where it's like about 2%, or it's getting it over time. It's becoming a smaller and smaller percentage of my portfolio, and it's got me thinking, even though I really like the company, it's not one that I have an interest in buying now, because it's just so far above my cost basis, and it's seen such a run up, um, that I've kind of been thinking maybe maybe in time that will be one I end up letting go of, not because I think it's bad, but because I think it will ultimately end up being a position that doesn't really move the needle, just because it does, it is diminishing in weighting in the portfolio. So that's kind of what I've been thinking about with AbbVie lately. But excuse me, I wouldn't do that unless I had a better use for that capital. So, and I'm happy just keeping it in a good company for now. So, let's see. Yeah, I talked about Hercules Capital recently. I don't think I'll be buying it, just because I have two other BDCs, and I think that's good enough for me for now. But yeah, I think that's a pretty solid looking one. Really solid looking business development company. I like it. Okay. Yeah, Janice. Yeah, that's good to know. Good to know. Let's see. Okay, let's pretty much caught up here. Okay. So guys, let's jump over here to some of our questions here. This first one is coming from Jake, who said, I know in a recent video you added to Blue Owl Capital Corporation. I have been as well. Do you buy just for dividends, or do you think there is price? Do you think there is price growth possible? So that's a good question. So do I think there is price growth possible with Blue Owl? Probably there may be some right now, or excuse me, there may not be too much right now, because Blue Owl has seen, well, I guess it's not seen too crazy of a run up. So here, let me jump over to the spreadsheet so you guys can see this real quick. Here's my Blue Owl position. Let's zoom in on this a little bit. So here's my Blue Owl position. My average cost per share is $13.82. Current share price is $14.47. I'm only up 4%, 4.7%. Looking at the share price here. Total returns much better. Obviously, the great majority of the total returns with this position have come from dividends. And what's the yield right now? 10.2%. So, I wouldn't, how do I say this? I think it's possible that there is going to be price growth and share price appreciation with Blue Owl, but probably not too much. I don't think you'll see as much. Like, for example, I don't think you'll see as much share price appreciation with Blue Owl as you would with something like Snap-on or Visa or Williams-Sonoma or Zoetis, or hopefully at some point Clear Secure. I don't think you'll see too much share price appreciation with Blue Owl. I think that you would be buying it more so, I don't want to say for the dividends, but with the expectation that most of your returns will come from the cash flow, will come from the dividend income. And I would say that probably for the most part, that would be true with a lot of the business development companies, but having said that, I think Main Street Capital Corporation has been a really good exception to what I just said. I'm up about 43% with my Main Street position. So the appreciation with this one has been very solid. And it's not even like at its 52-week high. It was upwards of $63 per share in the last year. And with that said, too, with Blue Owl, it's still has some room to run. It looks like the highest it was in the last year was about $16 per share. So yeah, there's still room to see some share price increase, but over a long period of time, yeah, it's you're getting that cash flow. That's where I think most of the total returns will come from. But as long as Blue Owl continues to increase its sales, increase its net income, just grow fundamentally, yeah, there should be some share price appreciation that comes along with that as well. And with that said, I don't think you'd want to buy any company unless you thought that those things would take place. Hopefully all of that makes sense. And hopefully that answers the question too. So let me see what's happening here in the chat. Striper says, look at Caterpillar. Yeah, we can check out Cat. Take a sip here. Vasco's got an interesting question here. We'll see if we can answer that. Nice. Sir Dudebro, man. My niece may receive double-digit dividends this month. Her second month of investing. Not bad for a 2-year-old. Nice, man. Very nice. Okay, so let's go to this next one. So at what payout ratio would you get concerned in a dividend king? I'm thinking Coca-Cola and Pepsi, both nearing 80%. So it's tough to say. Obviously, generally speaking, the lower the payout ratio, the safer the dividend is going to be. The higher the payout ratio, the more concerning it is. But, there are some companies, if we go over to these, showing Snapstock there we go. If we jump over to Snapstock, let's look at Altria Group as an example, because their payout ratio has historically hovered at about 80%. Actually a little bit lower, it looks like in 2024. But looking at the payout ratio, the free cash flow payout ratio, we can see it's hovered at about 80%. And so a higher payout ratio is natural for a company like Altria. They do that by design. They like to shell out a lot of their cash flow and pay it out to their shareholders. Now, and that's what I guess that's how I would be gauging it is a high payout ratio normal for this company? Once again, with a company like Altria, it is. Maybe it's typical for a company like Coca-Cola to have a higher payout ratio. We can see, it looks like it's been pretty steady based on this chart since 2019, and even before, pretty high years right here, right? But going all the way back to 2015, their payout ratio was still 80%. And so it seems like this is right in line with where Coca-Cola usually keeps it. And these companies have been around so long. They've been growing and paying their dividends for so long. They've been in business for so long. The business it's a pretty predictable business. And so based on all of those things, I think you can be a bit more, I don't think you have to be as concerned about a higher payout ratio, especially if the sales are stable, if the earnings are stable, if the free cash flow is stable, if the predictability is high, then a higher payout ratio, especially when it's normal, is less of a concern than if a high payout ratio is out of character. And also if the sales and earnings and free cash flow were more cyclical, or unpredictable is probably a better word. Now with Pepsi, Pepsi's kind of been an interesting case. I would say I'm a bit more concerned with Pepsi than I am with Coca-Cola, because the earnings payout ratio for the most part looks pretty steady. This looks to be in line with the averages, so I'm not as concerned about that. But the free cash flow payout ratio, we can clearly see the trend has been up and up over the last 10 years. It wasn't that long ago, 8, 9, 10 years ago, that the payout ratio was 65% and below. But yeah, now, like I was saying, in 2024, it's over 100%. In the trailing 12 months, it's still over 100%. Even in 2023, it got up to 85%. 2022 was over 100%. So I would say that it's spotty at best. But yeah, I would be a bit more concerned with something like Pepsi. But zooming out and just speaking generally, once again, I think it really just depends on what's normal for these companies and how predictable are the sales, earnings, and free cash flow. So, and if you notice those starting to deteriorate with the payout ratios increasing, then that's definitely a big red flag. We saw that with like VF Corporation, for example, a dividend king. But the fundamentals really, really took a hit. And as a result, they ended up having to cut the dividend multiple times. Leggett & Platt was another one, actually. I think they were a dividend king, right? If I'm remembering correctly, they were a dividend king. And if we go look at this, back in 2022, the sales really started to to go downhill consistently. Actually, yeah, 2022. And along with that, the earnings per share dipped into negative territory. The free cash flow per share actually seemed to be in a pretty decent spot, but nonetheless, the company did end up reducing the dividend. And with that, it looked like the payout ratios, well, they're starting to level out now. Payout ratios coming back down. But yeah, that was one where the situation started to deteriorate for sure. 2 years of negative net income, definitely not going to bode well for the dividend. Let's see. Okay. So a couple of quick comments here. Is Procter & Gamble a good buy right now? I think it's looking interesting. Procter & Gamble is at their 52-week low. So yeah, that one's looking interesting. Let's see. Thoughts on buying J&J at current prices? I like it. I like J&J at current prices. Let's see. Aussie Dividend, thoughts on DGRO? I like DGRO. I think it's a solid ETF. DVY, that's another dividend ETF, I believe. Yeah, this one actually looks kind of solid too. Nice. I'll show you guys what I'm looking at over here on Seeking Alpha. Similar number of holdings as SCHD. Pretty similar dividend stats too. I mean, the yield is about what you get with SCHD. 5-year growth rate is considerably lower than SCHD. Real quick, before we look at the returns, what's been the much higher expense ratio though? So it's about 6 times higher. The expense ratio is about 6 times higher than SCHD's. So let's see what the performance is looking like though. So let's do that. Let's do this. Let's go over last 5 years. Pretty similar returns. Over the last 10 years, yeah, over the last 10 years, SCHD has outperformed. So with SCHD, you're getting a better performing fund for about 1/6 of the price, and you're getting about twice as much. Not twice as much. You're getting a double-digit dividend growth rate versus a high single-digit dividend growth rate with DVY. But DVY doesn't look terrible. Doesn't look terrible at all. Okay, so let's keep jumping. Let's keep going through these comments, guys. This next one's we already did this one, Korean. Sorry. This next one's from Liv, who said, "Hope you had a good week. Anyway, we could look at Target. I know they're struggling, but thinking about starting a position." Yes. Yeah, Target seems like Target's definitely fallen on hard times. Target, I feel like, has really struggled to find their footing amongst all these other retailers, amongst the Amazons and the Costcos and the Walmarts. I don't know. Target to me it seems kind of like the odd man out. And it's hard for me as time goes on. It's hard for me to think about what would make Target, like what separates Target from Amazon? What separates Target from Walmart, from Costco? What is Target's advantage? What does Target have that the other retailers do not? And I don't know. I'm really struggling with that. I used to like Target, and there's been times where I've been interested in Target. Right now being one of them. I think I was talking about this last month or a couple of months ago. You know, with Target sitting where it's at, $95.50 per share, down 35% in the last year, and a free cash flow yield of 9.2%. You know, it's hard to look at this one and not get interested, right? It's undeniably cheap. The yield is crazy. The dividend stats are crazy. Near 5% dividend yield, double-digit dividend growth rate, dividend king. It's got a lot going for it in terms of valuation and dividend stats. It has a lot to offer there. And the fundamentals aren't terrible either, I guess. You know, the revenue's kind of leveled off since 2023. Earnings per share, for the most part, is growing. You know, a couple of up and down years, but the general trend has been growing. Same with the free cash flow per share, I would say. So it's not all bad. Margins are kind of starting to decline a bit. Nothing too crazy, but they're, since 2020, they're kind of starting to slip a little bit. We can see that's definitely true here in the free cash flow margin. Debt situation doesn't look too bad. So I don't know, like I was saying, and the dividend looks very well covered too. Sorry, gotta mention that. So I don't know. I really don't know what to make of Target, but looking beyond the numbers, excuse me, looking beyond the numbers, it's just one that I can't bring myself to pull the trigger on. I'm sorry, guys, that carbonation. Target is one I cannot bring myself to pull the trigger on. I really want to like this stock more than I do. I really want to like the company more than I do because I really like this stock. I like the price. I like the dividend stats, but the things beyond that, I don't know. And I'm not like a swing trade kind of guy, but the thought had crossed my mind where I thought, it's cheap enough right now. Let's just buy some because it looks like it's bound to just go back up at some point. And yeah, I don't know. I still even that I'm not gonna. I guess what I'm trying to get to is I've been trying to justify in my head, how can I buy this? How can it make sense for me to buy this? And it just, I can never come to something, a conclusion that I feel good about. So, let's see. Yeah, Cygnus here says Target has slowed the growth of the dividend over the last 2 years. Shannon says, to me, Target hasn't separated itself as far as I can see. It also has had some negative press. Yeah. B still says Target is not doing well with e-delivery. Oh, Dan. Hey, Ryan, congrats on being a dad soon. I'm also going to be a dad in August. Well, man, congrats to you as well. Thank you. That's awesome. Okay, guys, let's go to this next question from Janet. I actually want to get your guys' thoughts on this here in the chat. Let me know what you think. Janet wants to know, how do you know what dividend stocks to dollar cost into and hold forever? Where do we even start with this? I feel like I've made a lot of videos over on the channel kind of about this type of subject. And let me show you, Janet, a video that I think would be good for you to watch. I'll answer the question here, but there's a video that I made. Here, let me jump over to the screen. There's a video I made a while back that was like even just look at this right here, how to research dividend stocks for brand new investors. Check that video out. Where is it? How to build a dividend stock portfolio for brand new investors. Check that one out. There's one other one that I talked a lot about this. Where is it? I don't know. I won't look too long, guys, if I don't find it. Buy big buys. Maybe, I don't know. I don't know where it is. Here we go. This is what I was looking for. My foolproof way to pick winning dividend stocks. Go check this video out for sure. I'll talk all about, basically in that video, I answered this exact question, but I'll give a quick Spark Notes version of it here. So when it comes to figuring out which dividend stocks to buy, the first question that you should always try to answer is, do I understand this company? Can I wrap my head around how this company makes money? Can I wrap my head around how this company makes money? And if you struggle to wrap your arms around that, it's probably not one that you should be investing in. And this is something that I've learned the hard way, but certainly more than once. This is something that I think a lot of us have to learn the hard way. But that's step number one. Do I understand this company. And a good litmus test for gauging that is if you can, in a couple of sentences or in a few sentences, if you can explain what the company does, like you were talking to a 9-year-old. So like, for example, Zoetis. If I was to do that with Zoetis and I was talking to, a kid and I wanted them to understand it, I would say that Zoetis makes medicine for cats and dogs that we love, for our pets, and they also make medicine for things like cows and chickens and fish that we eat. And so if you can do something like that for a company, then it's within your wheelhouse. It's within what Warren Buffett would call your circle of competence. And you always want to stay within that circle. You get outside that circle, you start running into some problems. So that's step number one. The second thing is you obviously want to look at the financials, so, and this is pretty, it can be pretty straightforward and simple to do. That's really what we're trying to accomplish here with Snapstock, is to make it like as simple and straightforward as possible. But generally speaking, you want to invest in companies that are growing, companies that are going to be bigger and better tomorrow and in the future than they are today. And Visa is like the gold standard for this, I think, just because their growth metrics are so spot on. Like everything is straight up and to the right. So if you find a company that looks like this, they're doing something right. Whose charts look like this, they're doing something right. Similarly, you want companies with, pretty minimal debt, or at least debt that's manageable and serviceable, and also whose dividends are very well covered. And so, yeah, I think from a very high level, that's how you get an idea of which dividend stocks are worth investing into. There's probably more to it than that I'm missing out, but I feel like this in itself could be like an hour-long conversation, and I can certainly talk in circles about it, no problem. So let's see. Hopefully that answers your question. And it's actually one more part to this, the part about holding stocks forever. We talk a lot about that, and I will say the intent with every company should be to hold on to it forever. As a long-term shareholder, it's in the name. You hold on to these stocks as instead of being like a share flipper, which is exactly what it sounds like, buying in and out of them. Not that there's necessarily anything wrong with that. It's just a different game. As shareholders, we are playing the long game. We're buying stocks to hold on to them for dear life. And it sounds good. And I think your intent should always be that. But I also think that you need to be able to adapt to changing situations and evolving sentiment towards companies. Because you'll buy companies today, let's say hypothetically, you're just starting to invest or whatever. You'll buy companies today, and down the road, your opinion on them can change as you learn more about this investing stuff and you learn more about what you're doing and you get more experience in the market. You might come to find that the companies that you initially started with, or the companies that you own and plan to hold on to forever, aren't necessarily ones you actually want to hold on to forever. And in my case, recently, that was exactly what I experienced with Altria Group. As time has gone on and Altria's story has started to play out a bit more, I came to the conclusion that it wasn't playing out in the way that I'd liked. And I was ready to hold on to Altria Group for a long, long period of time. But as time has gone on, over these last couple of years, I've been watching the story develop, and it's developed in a way that makes me think they're not making much progress toward their long-term goals of replacing their sales from declining cigarette volumes, essentially. And I could be wrong about that. I wish good things for Altria, for sure. And if the situation changed, I would definitely consider getting back into it. But that was kind of my interpretation of it. And that was one instance where I thought I was going to be holding on to a company forever. I ended up holding it for 5 years, about 5 years, which is pretty solid. But anyway, what I was trying to say was that was an example of a company that I wanted to hold on to for a long, long, long time, but had to be honest with myself and adapt the plan based on what I was seeing. So hopefully that makes sense, Janet. Okay, so we got two more questions here, guys. About 20 minutes left in the stream. This next one's from Striper, who wants us to look at Caterpillar. We certainly can do that. It's been a while since we've looked at Caterpillar, probably at least a couple of months. But this is a very high quality company, actually, guys. And if we look at the Snap score, which I've been neglecting when we've been looking at these companies so far, the Snap score is 7.5. So, this has it above average, really solid scores from top to bottom. Nice growth, decent profitability, good debt situation, solid dividends and buybacks, very strong capital efficiency. And it's up 10.5% in the last year. Even with that, I will say the free cash flow yield is really not too bad, 4.92. So just based on this, the valuation is not terrible. It's really not. Could be better, but it definitely could be worse. And in fact, this looks to be right in line with the company's 5-year average, a little bit below the 10-year, so maybe just a little bit above where you'd want to buy it. Maybe just a little bit. But looking at the growth, guys, very solid, right? Very solid revenue growth since 2020. I mean, across the last decade, but we really see some big spikes here in 2020, and excluding 2020, excuse me. The revenue growth chart's still looking really good, and we're seeing a nice upward slope there. Definitely see that in earnings per share. Obviously, the only down year was really 2020. And free cash flow has been pretty consistently growing. Really big jump right here. The free cash flow doubled. So, and it stayed up in 2024 as well. So that's looking really good. Now, this is awesome to see. With Caterpillar, they're actually becoming more profitable over time. So not only are they generating more earnings per share, but they're also reducing costs along the way, which is allowing them to become more profitable over time. That's a great sign. That's looking really good. And the free cash flow margin, likely just due to the big jump in free cash flow per share here, but the free cash flow margin really jumped up here in 2023. Along with that, likely due or pretty much due to the increase in free cash flow per share, the net debt to free cash flow is really going down, really going down. So, just a handful of years ago, back in 2018, it was at 10, which was very high. But in 2024, it was less than half of that, 3.5. So I really like that. And this is happening while debt is still continuing to increase. So I think that's a really great sign. Interest coverage is very, very high. So Caterpillar's looking great. Obviously, a very solid dividend grower. It looks like, we can expect upper single digits over the last 5 years. That's looking really good. I mean, everything's looking really good. The only downside is that the yield is going down, but the share price keeps going up. So that's what's going on there. And the payout ratio is going down over time too. So yeah, everything with Caterpillar looks really good. Really good looking company. Okay. So this last one's from Vasco. Vasco says, Ryan, one question. For someone who invests $300 per month, does dividend growth instead of high yield make sense in the long run? Good question. Let's see. And let me know your guys' thoughts on this in the chat. I'm actually going to save this because this could be a good question to answer in a video in the future. So for someone who invests just $300 a month, dividend growth instead of high yield, which one makes more sense? So for starters, I don't think the amount that you invest determines which approach you should take. I also think it's good to have a well-balanced portfolio. I mean, you guys know my whole approach is building like an all-weather portfolio that consists of a bit of everything, some dividend growth, some high yield stuff. I think it's important to have balance in your portfolio. And once again, the amount that you invest per month, I don't think plays a role in your investing strategy. I think really what should determine your investing strategy is basically your time horizon and also kind of your personality. What do you time horizon, goals, personality. If you have a longer time horizon, then there's not much of a you don't have to go all in on high yield stocks if you have like a longer time horizon and can let the snowball effect do its thing. What else was I going to add to that? Oh, and also it just depends on like your goals too, I guess. Like, what do you want out of your investments? Getting distracted by the chat. So yeah, I mean, man, I would just ask yourself, like, I would say the biggest thing is how long do you plan on living off of your dividends? If you've got a decent amount of time, like, decade, couple decades, maybe even longer, then yeah, I mean, it doesn't make sense to me to prioritize high yield. I mean, like I said, balance is important. It's good to have some high yield stuff, I think. I certainly do, even though I've got a time horizon of probably about a decade plus. But it's not everything. I don't have like my portfolio yield is not like 7, 8, 9%. I'm rocking like a 3.5% yield across my entire portfolio, which is still like a pretty decent yield. But with that, I also have the dividend growth to balance it out. So I'm kind of getting the best of both worlds: 3.5% starting yield, 9.5% dividend growth rate, I think. And so I think that having that combination is going to allow me to get the best of both worlds leading into when I do plan to live off my dividends. But if you're closer to retirement, if you're a few years away, then maybe go with a bit of across your entire portfolio, maybe shoot to have a bit of a higher yield, not crazy high, because I still think you need, number one, because you don't want to invest in yield traps, but also number two, I still think you need dividend growth. But if you're 5 years or less away from retirement and your goal is to use your dividend income, then having more income is a much higher priority. So that's what I was saying. It just depends on your time horizon. It depends on what you want out of your investments. Hopefully that makes sense. I probably didn't do the best job of answering that. So yeah, this is a good point. Like, and this is where your time horizon does play a big role. So dividend growth for 20 plus years, like Visa's 20-year dividend yield on cost is 9%. So yeah, Shannon here says, personally, I would invest with the goal of 2 to 4% in your 30s. You have 30 plus years, so a balance of both. Okay. Yeah, there we go. This is important context. And honestly, I should have asked for you to give us a little more background info. So time horizon is 20 to 25 years, and I have that balance that you talk about. Okay. Cool. Well, that all sounds good, man. Growscape, not a question, but just wanted to say thanks for the consistent uploads and helping us all become better investors. Man, thank you so much. I really appreciate really appreciate that, and I really appreciate all of your guys' support here on the channel. It means a lot. So Unknown wants to know, does anybody have any good high yield savings accounts for kids that are over 3.8%? I don't really know. I think my Ally account's like 3.75 or something like that, 3.7. But anyway, guys, I'm all caught up on the chat. We'll wrap it up here in just a few minutes. Because I smell dinner. I think dinner's ready or close to being ready. So I'll probably hop off here in the next few minutes. But if you guys have any last questions, anything else that you want to go over, drop it here in the chat, and we'll go through maybe one more stock, one more question, one more whatever. This shirt still cracks me up. Rod, please get to 100K next week. Man, I know. I hope so. Man. It'll happen eventually, Rod, but man, it's been yeah, it's been teasing me, that's for sure. It's the carrot that's been dangled in front of my face for a long time now. Let's see. El Dynamico, what are your thoughts on SPLG complementing SCHD? I think that's a great complement. That's more or less the same approach that I take in my Roth IRA. It's not SPLG, but it's VOO. So it's the S&P 500, same thing. So yeah, I think that's a great combo. Chris Hess Midstream. Okay, we'll take a look at that one. So let's see what's going on here. Oh, interesting. Well, it's tough. So with MLPs like this, it really, you want to look at the distributable cash flow. And I don't know if Snapstock will do the best job of showing that. So maybe we can. That's really what you want to look for, is their distributable cash flow. And I wonder if there's I wonder if we can go look at a quick earnings presentation. Let's do this. This could be what we're looking for. Come on. Maybe we'll zoom in a little bit. So nice. The dividend looks very well covered right here. That's great. Looks like they're expecting some really strong growth in their volumes. That's really nice. Targeting at least 5% dividend growth. I'd honestly, Chris, I'd have to spend more time with this one, but I mean, it looks pretty good. Fixed fees are 85% of revenue. That's great. That's awesome. Fees cannot be changed or reduced once set. So, and this is really good too. 100% fee-based contract. So, very predictable revenue. This is really looking good. Yeah, really looking good. Obviously, I'm just kind of skimming it real quick, right? But yeah, I mean, this very quick scan, it looks promising. Looks like a great MLP. Very solid. Robert, when do you plan to live off your dividends? That's a great question. At this point, and this will change over time. I'm sure it's going to be just a continually evolving situation. But as of now, my plan is to start pulling some of my dividends. Maybe when I reach a point where I'm averaging about $2,000 in dividends per month, and at that point, which I think I should hit it by the time I'm like in my mid 40s, somewhere in there, if I just keep going at this rate. And so that'll be another probably 10 to 15 years, probably 15 years, closer to 15. But at that point, I think what I would like to do is maybe start pulling half of my dividends. So maybe start pulling like $1,000 per month on average, reinvest the other 1,000, and then slowly increase the withdrawals over time, but continue to have that balance where I'm pulling some, but also reinvesting some. You know what I'm saying? Okay. This is a good question, actually. Ryan, what's performed better, your Roth or your taxable? My taxable account has performed better. Let me see if I can show you guys what the taxable has done really since I started investing, or at least since I started posting on YouTube, which really was only like probably a few months after I started investing. Let me see if I can log into Schwab real quick and show you that. Bear with me. It might make me, oh, there we go. Okay, I'm going to have it text me. Bear with me, folks. So what we're going to do is we're going to look at the portfolio performance from going all the way back to October 15th, 2020, which was when I posted my first video on YouTube. And here we go. Make sure like I'm making sure like my account number or anything's not on here. Okay. So here's where we're sitting at, guys. So since October 15th, 2020 to now, my account has grown 92.8%. On an annualized basis, 15.06%, which is still just barely outperforming the S&P, outperforming the NASDAQ and the Dow Jones. Here's what it looks like not on an annualized basis. So we have about a 10%, 10% lead, 9% lead. Almost a 9% lead. And hopefully it holds. We'll see how things go into the future, but so far we have done pretty well. I think this year really, like this year has been how do I say it? This year we've kind of narrowed the spread between the two here in 2025. But we'll see how things continue to play out. But yeah, so far we've done pretty well. Can't complain. Okay, guys. El Dynamico says you sound a bit tired. No, man, I'm good. I'm good. I'm relaxed. I'm good. But with that said, I do think we are going to wrap it up, guys. It is dinner time. We're having I think we're just having like spaghetti, but like protein pasta with some ground turkey. It'll be good. And I'm hungry. Antonio, if you hear anything, it's just I'm hungry. Like I'm ready for dinner. Oh wow. Sir Dude Man says, I love how my taxable is up 135% since I started in April of 2021. It's all that Broadcom, man. You've been doing good. But guys, yeah, once again, we're going to wrap it up here. I want to thank you guys all so much for hanging out with me this last hour. It was a lot of fun, really fun live stream. I hope you guys all have a great weekend. I don't think tomorrow I'm putting out a video, but Sunday I'm putting out the next portfolio review video, and we've got a few really interesting portfolios, guys. That'll be going out first thing Sunday morning. One of the portfolios, I'll tell you what, the first one that's going to be in the video is from a 13-year-old kid who sent in his portfolio to be reviewed. 13 years old, and he's already been investing. So that'll be an interesting one to check out. I think you guys will dig the video, so be on the lookout for that one Sunday morning. And otherwise, I hope you guys have a fantastic weekend. Stay out of trouble, and I will see you in the next one.